Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Ahead of key data like the PMIs from various countries and the anticipated Jackson Hole summit, markets have been showing good signs of dollar weakness. Euro and sterling continue with its trend higher, while data from the US economy somewhat remains mixed. For example, restaurant spending in the US fell almost 4% year on year in July, which is the largest decrease since 2020. Good morning, JK. What do you make out of of this recent dollar weakness move? And are you looking at any value buy regions for the dollar?
Good morning, Swaraj. Still not sure whether it's a value buy. Yes, it is at the cycles low, or rather, I would say the broad range low where we have hit. Now, if you look at it, we have come a full circle since January 24. The situation is almost similar to what we saw in January back then, when dollar index fell to similar lows on expectation of hefty rate cuts in 2024, almost six of them after the December dot plot showed three rate cuts likely. Since then, a lot changed on the data, mainly inflation resurfaced, and then Fed went on a hawkish mode. Market repriced the expectations, went to one cut as against six cuts, and then now again after the inflation eased, not exactly the target, but below 3%. We have had data showing U.S. economy slowing. Then market is again pricing in three rate cuts. But of course, Fed is probably not as dovish. But yes, I think now if you look at the statements from many members, they are looking at the possibility of a September move. So how far they will move versus market's expectation of nearly 1% move is something that we'll wait and see. Yes, if there is a disappointment, we again, possible what you say, like value buy the dollar, and then because the US economy still not doing so badly. I mean, the GDP number is still good in US, and unemployment rate has gone up, but yes, I think we need some more data to confirm that the economy is slipping sharply before we assume a breakdown in the dollar index to new cycle low. So market will be cautious at these levels and perhaps see the final word from Powell on Friday. If he turns out to be cautiously dovish, then that might result in some profit taking in the dollar as well. An interesting thing in the recent moves in the dollar, rupee has also somewhat participated, at least in the NDF market, and we have seen the move to 83 81 in on the offshore market yesterday, along with the fall in the dollar to below 102. So that possibly is an indication that how the market is positioned, at least as far as the exporters and flow guys are concerned, because we have seen a lot of outflows, and that has kept the dollar at the highs. And of course, as we all know, 84 was prevented by the RBI from breaking through. Yeah, I think flows and the dollar index hold the key. I think this will be a very crucial week as far as the dollar rupee is also concerned. If we see further breakdown in the dollar index, and then we see also the rate, the flows coming back, we could actually see some more strength in the INR, which has traded at its weakest level for several weeks. Now, on the data side, not much yesterday, but then the leading economic indicators, one of the forward-looking data actually showed a fall in July by 0.6%, following a decline of 0.2% in June. At least the conference board is not so bullish on US growth, because it expects the real GDP growth to slow over the next few quarters, and at 0.6% annualized for Q3 of 2024 and 1% annualized for the full year Q4. That's quite a come down from the numbers that we have seen so far. Yes, and we also had the statement from Neil Kashkari, the Minneapolis Fed president, who said that the balance of risks have now shifted more towards the labor market, and away from the inflation side of their dual mandate. So now they're going to value the slowing economy more than the inflation, which is still to hit their targets. Therefore, so this is a clear indication that in fact we had seen Goolsbee also speaking almost similar language a day back. So these statements are actually indicating that a September move is almost very given, but how it's going to go forward is what the market will be looking at. We'll also have FOMC minutes tomorrow night. That will give some more deeper insight into what the members were thinking during the last Fed meeting. So actually we this is a week where we actually stop and assess how the policy is going to move forward. Not too much of data, but a lot of views that is going to emerge from the coming days. Apart from, of course, the PMI numbers that will also come for various economies. So we are at a very crucial juncture. Dollar is at the cycle lows, and then, or rather, the range lows, and then we have important statements coming up from the Fed chairman as well as the FOMC minutes. Dollar rupee is showing some signs of strength. So let's see how things move forward from here. I am sure next week we probably will see a different picture, either dollar sharply down after Powell's statement or retracing its recent big fall. I'm slightly biased towards a bit of recovery in the dollar. Thank you.
Thank you, JK. And of course, dollar trading at the broad ranges, lower end. And as JK mentioned, it's at a crucial juncture as markets try to assess the path of monetary policy going forward. Now, markets are pricing 3 rate cuts, but probably Fed isn't that dovish, but members definitely are talking about rate cuts. I think it's just the extent of the rate cuts that that the projections are differing. For rupee, NDF market for rupee showed a move to 83, 81, breaking down from its recent reaches. Flows and dollar index hold the key, and a further breakdown in dollar index or an increased flow may lead to some more rupee appreciation. So I think, as JK mentioned, the monetary policy moves will be in limelight this week, especially the anticipated cuts in September and what Mr. Powell has to say during the Jackson Hole summit. So markets would be.
Raj, by the way, while speaking on monetary policy, day after tomorrow, we have also the monthly webinar where we'll be dealing extensively on monetary policies of global central banks as well as the Indian central bank. It's going to be featuring one of the speakers from abroad as well as a local economist. We have given the details already circulated to all. I'm sure all of the listeners will be and the corporates will be participating in that webinar, get value from that.
Absolutely, JK. And especially when we are talking about monetary policy and the rate cut cycle that might emerge in the US, this webinar becomes even more crucial. So do tune in day after tomorrow for the webinar, and you might get some great insights from very different perspectives. One, of course, an Indian economist, and one from outside. So that would be a very interesting webinar to look forward to. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets, and hope to see you on the webinar day after tomorrow. Thank you.